This is the first video of Quadzilla Basics. This is where we show you how to use Quadzilla to level up your trading, to make you a better trader, to make you a consistently profitable trader. Quadzilla is an indicator that runs on TradingView. If you haven't got TradingView, go to savewith.crypto.org/TV and get it from there. If you decide to upgrade to a premium annual membership, you'll get $15 off by using that link. So use it. When you've got TradingView, you'll be able to get lots of indicators for free. So you just go here and you search for whatever indicator you fancy. Say you want the simple moving average, you can just click that and it will load. And you'll see it on this main pane here of TradingView. In this case, it's this blue line here. Okay. Now, Quadzilla isn't a free indicator. It is a paid indicator, and that's because we put a lot of work, a lot of development time into it, and we think we've got something really special here that is worth paying for. And what we found is that it pays for itself very, very quickly. Most people who have it say that it normally takes a few weeks of trading to pay for a year's worth of Quadzilla. And these are usually people not trading with enormous balances. They're people with like a few $100 to a few $1,000 in a trading account. You can get Quadzilla from savewith.crypto.org. That's our website. It's savewith.crypto.org. It's .org, not .com. On the home page, you can go to Get Quadzilla, or you can go straight to savewithcrypto.org/QZ. The cheapest way is to choose it for a year and subscribe there. Once we receive your payment, we process it manually and we add your TradingView name to the list of Quadzilla users. Once we've done that, you'll be able to come to the indicators here and go to invite only, and you will see in here Quadzilla. If you like, you can add that to your favorites, and you just need to click it to install it. It is quite a large script, so sometimes it takes a few seconds to load. Now, Quadzilla is a little bit different to many indicators because it loads elements of it into this lower section of TradingView here, as well as the main pane here. Down here is all to do with the momentum of the asset, and here is to do with the price of the asset. In TradingView, if you double click the top pane, it will show just the top pane. If you double click it again, it adds the lower pane. If you double click the lower pane, it shows the lower pane only. Double click that again and it will show the default view. Now, many people have different preferences of the way they want to see Quadzilla, but we believe nobody needs to see this big long mess of numbers here. So what you need to do is to come to this settings gear symbol here and go to the style tab, go to the bottom, and if we uncheck inputs in status line and values in status line, that will clear this up nicely. You can choose if you want to see these labels on the price scale or not. Personally, I like to have that off as well. If you want to save this as a default, you can literally just go here and go save as default and press OK. So what are the different elements to Quadzilla? Well, first of all, let's start off with the momentum oscillator. So the main feature of this is this band here, which we call the convergence band. If you need to know the technical details of this, it's made out of 4 different stochastics, and the red border here is the fastest moving stochastic, and the white line here is the average of the others. You'll get an idea of how this works later on, but essentially what we're looking for is these conditions here where the convergence band goes above this line here, which is at 80%. Oscillators go from 0 to 100. And the other areas of interest is when the convergence band goes below this 20% mark here. You can think of momentum as the rate of which people are buying or selling an asset. So for example, as the band was going up here, there was lots of buyers and not many sellers. But when you got to the peak here, the buyers were getting exhausted, the price was getting too high, and the sellers were starting to step in. And as the sellers stepped in, the convergence band starts to come down. This condition is what we call overbought. And as you can guess, as the momentum decreases, that means that the sellers are getting exhausted. They're not getting a good price anymore, and the buyers step in, and we see the momentum increase. And we call this condition oversold. Now, by understanding when the oversold and overbought conditions happen, we can get a good idea of when the price of the asset is going to reverse, which of course gives us the best trading opportunities for buying when it's low and selling when it's high. Now, the momentum oscillator also shows you various other signals to signify different movements and conditions of the convergence band, but we'll worry about that in a later video. But for now, just think that under 20% means the price is likely to go back up, and above 80% means the price is likely to come down. Okay, so let's double click this to show the top pane. And to show the top pane on its own, we can double click that as well. There you go. Now, one of the fundamental things we look at in the top pane is these lines here, this green one here, the yellow one, and the cyan line. Now, what these are exponential moving averages. A moving average just gives you the average price over a period of time, and the exponential moving average tends to weight the more recent results, which we found to be more accurate. So the green one is a 55 EMA. So for example, here on the 1 hour time frame, it's looking at the average over the past 55 bars. The yellow is a 21 EMA, and the cyan is a 9 EMA. Now, what we look for here is when they cross over. In particular, the strongest signal is when the green and the yellow cross over. If they cross this way, the yellow above the green, that is a bullish sign. That means the price is going to go up. And if they cross the other way, where the yellow goes below the green, like that, that is a bearish signal, which means the price is going to go down. So that is the yellow 21 and the green 55 EMA. We can also look at where the cyan, the 9 EMA, crosses the yellow 21 EMA. Now, these are faster moving averages, so you'll see more of them, but they can sometimes help as well to give an idea where the price is going. So for example, here the 9 EMA crossed over the yellow 21 EMA, which meant the price was going to come down. Back here we saw the cyan cross the yellow and the price went up. Now, Quadzilla helps you to see these by adding this shading here if these EMAs are approaching at a rate where they are likely to cross. So here they did. So you see a green shading if it's positive, if the price is going to go up. And if the price is going down, you see this purple shading like this. We'll talk more about the EMAs in a later video. But for now, just think that instances like this, where the yellow goes above the green, means the price is going to go up. And then when the yellow goes below the green, the price is usually going to go down. Now, one of the most stunning features of Quadzilla is the retracement levels. This is an example here. This one is known as a bearish retracement level. So here the price went up, and as it came back down, this retracement level formed. It actually formed when the arrowhead of the retracement level is there. So it actually formed when the price was down here. Now what that means, it means that the price is likely to retrace to that level sometime in the future. And you can see that in this case, 9 days later, the price did come up to this level and then reverse back down again. It went down because this is a red bearish retracement level. Of course, we have bullish ones too. So here's an example too. You can see the price was going up here, but all of a sudden this bullish retracement level appeared here. Now that means as the price was going up, you kind of know that it's very likely that the price is going to come back to this level sooner or later. And in fact what happened here was 17 hours later, boom, the price came down to the bullish retracement, and because it was a bullish one, the price came down, met that level, and then bounced back up again. These retracement levels are extremely powerful in Quadzilla, and on most time frames for most assets, these have a very, very reliable rate of completion. Typically it's over 90%. Now with Quadzilla, what we need to do is to interpret the results from the momentum oscillator down here, as well as what we're seeing up here in the main pane with the EMAs and the retracement levels. But I'm hoping this video has given you an overview to what Quadzilla can do and how powerful it really is. In the next videos, we'll break this down and look at each signal on its own so that you can fully understand what's happening in the indicator and how you can use it to level up your trading. See you in the next one.